Hello everyone, welcome to the Ichimoku daily analysis for the SP 500 for Wednesday, February the 3rd, 2010. Change of character for this market today, very small bodied candle, and that instantly tells us that the bulls who showed some very solid net progress on the day before have lost the bullishness that they had previously. The bears have made stronger net progress than the bulls today, albeit only fairly small. And this represents a danger for the trend in the first time frame. Now the trend in the first time frame remains up. We have a higher high to higher low. Today's candle was an equal high and a higher low. So today's candle doesn't change the trend, so the trend is up. We need confirmation of a lower high and a lower low relative to today's candle for a beginning of the new first time frame downtrend, if that does come to fruition. Now, because we do have this fairly small body and we have the close midway between the midway level and halfway of the range and the low, then we have the bears in control, but they did lose some commitment, as did the bulls throughout the day. So a fairly indecisive type of candle, although slightly leaning towards the strength of the bears. This is a potential reversal pattern, and when we consider this, though, the market has only been in an uptrend for one period, for one day, so we really do need something substantial to reverse. So this is a little bit iffy, this reversal pattern, because it's only a one-day trend to the upside. But I think the implications for the market are quite important here. It's a potential harami reversal pattern, and that's where the body of the current candle is completely engulfed by the body of the previous candle. Confirmation is needed for that pattern to be complete, so we do want to see a lower high and a lower low. Now the market is trading within the cloud of the Kumo, so that tells us that we have a fairly negative market. Previously we saw that the market found support at the bottom of the cloud and rallied from there, and is now finding resistance at the top of the cloud, and also around this 1100 region, which is what we expected over the last few days. The market has also found resistance at the Tenkan-sen, and that's the green line here, and that had been pointing down fairly sharply, reflecting the strong downside momentum in the market previously. And when that happens, that Tenkan-sen tends to act as an area of resistance in this case. The Kijun-sen here is still flat, so there is potential for the market to continue retracing back up towards the Kijun-sen. It tends to be an attractor of price action, and that coincides roughly with where the top of the cloud is. So there is potential for strong support up around that region, just above 1106, up to around 1111. The market is trading down below the Kijun-sen. So in the medium-term time frame, the market is still negative, although in the higher time frame, it's neutral, as we saw from the market trading within the cloud. And the market is now trading around the area of the Kijun-sen, which means that the market is fairly neutral within the short-term time frame. If anything, slightly bullish, but not very significant, trading around within that area. So there is potential for this market to sell off. Watch the low of the current candle for a potential first time frame downtrend, and potential for the market to find support down around 1080, and which coincides with the bottom of the cloud. If the market does rally, fairly strong resistance overhead from 1100 up to 1111.